This is the Asia Trade. I'm Avril Hong in Singapore.
And I'm Yvonne in Hong Kong. The top stories this hour. Investors gear up for a bumpy start to the trading week after Moody's stripped the U.S. government of its top credit rating over its ballooning debt. The Treasury Secretary, however, is downplaying concerns. Ukrainian President Volodymyr Zelensky talks with U.S. Vice President J.D. Vance in Rome, and Trump is expected to call Putin on Monday. The discussions come as D.C. presses for a quick end to the fighting.
And I'm Annabelle Drewlers at Asia's biggest tech show, Computex, with the focus this year on AI semiconductors and trade uncertainty. NVIDIA's Jensen Huang tells us he sees no evidence its chips are being diverted to China.
Well, it's a happy Monday to you all. We're taking a look at what is on play here, and it's really going to be the fallout from what we just talked about, that U.S. credit rating downgrade, Moody's being the last of the credit agencies to downgrade the U.S. from that top credit rating. So you're already seeing that being felt in S&P futures, NASDAQ futures as well, about 0.6 to the downside as well. Treasury futures are also heading lower, and we're watching very closely what this means for the curve with the 30-year yield. That's definitely in focus here, where we're already seeing the fallout from those 30-year bond futures as well. So expect maybe more of that bear steepening of the curve here this morning as we assess what this means for the U.S. when it comes to fiscal deficits and, of course, that tax and spending bill, which is still at play here at the moment. U.S. dollar is down across the board when it comes to G10, just given this news, so certainly one to watch as well. Oil is also slipping, and gold is catching a bid this morning, Avril.
Yeah, those losses on the greenback include against the yen as well as the Aussie dollar, though perhaps this week the path of the extent in which we can see this extent of gains in the G10s may be a bit complicated. We have an RBA decision that's due, along with the Japanese currency in focus not long after GDP print, which showed for the first quarter the Japanese economy shrinking. Does that complicate the path of the Japanese central bank? In the meantime, look at how futures are pointing on stocks, indicating lower, whether you're looking at Australia's benchmark or the Nikkei future. So looking like potentially another down day after yet another string of weekly gains on Asia stocks. 145.6, that's what we're seeing on dollar yen at the moment. Of course, keeping an eye on China data as well. That is due for later today. It'll give us a picture of the tariff hit, although this does not include the hit from, or the extent in which we see a bit of relief from the trade truce between the U.S. and China. Yvonne, we're also watching, of course, the U.S. Treasury Secretary Scott Bessent, who's been downplaying concerns over Washington's government debt, and this comes after Moody's lowered the U.S. credit score to AA1 from AAA on Friday, and this joins peers Fitch Ratings and S&P Global Ratings. And speaking to NBC, Bessent called Moody's a lagging indicator of U.S. fiscal health.
We didn't get here in the past 100 days. It's the Biden administration and the spending that we have seen over the past 4 years. You know, we inherited 6.7% deficit to GDP, the highest when we weren't in a recession, not in a war, and we are determined to bring the spending down and grow the economy.
That downgrade is in focus as the trading week begins. Garfield Reynolds, who leads our Markets Live Asia coverage, joins us now for a bit of analysis and what to expect for the week ahead. So, Garf, we are seeing this more or less reinforcing existing concerns, U.S. fiscal concerns, particularly on the longer end. I mean, what are you seeing in terms of how this is all going to shake out?
Well, yeah, the longer end when it comes to debt is definitely going to place plenty of concern. There's the potential that the 30-year yield will pop to 5% or above once more. Last time we got to those sorts of levels was amid the immediate post-reciprocal tariffs meltdown that we saw in bonds before President Trump decided to delay tariffs. So that's going to go on. There's also very much the angle that it's going to reinforce expectations for a weaker US dollar. The dollar recovered somewhat last week in the wake of the US-China trade truce, but even before Moody's made its move late on Friday, the dollar had come down a fair bit because it faces all these concerns about policy volatility, about the unsustainability of its debt path. And those concerns were there before Moody's acted to increase them. And in fact, over the weekend, we've also had the breakdown of, or at least partial breakdown of Republican Party efforts to pass this tax and spending bill that would allow for the extension of existing tax cuts and potentially some more additions to them. Part of the difficulty is that they want to try to fund at least some of those through spending cuts, and different parts of the Republican Party have problems either with the spending cuts or with part of what's supposed to go on with tax relief on certain issues. So getting that through is a problem. Meantime, part of what Moody's highlighted was that the current bill as it stands is not going to do anything to sustainably reduce deficits. Instead, it's likely to sustainably increase them, was the judgment from Moody's. And that's why it made the downgrade. And that's also a concern that investors have had. To some extent, they might have put that aside a little bit over the last couple of weeks as President Trump cooled his tariff rhetoric and managed to reach a couple of preliminary deals with the UK and China, and talked of more deals to come. So that took some of the heat out of the issues that had helped to drive the US dollar down a long way. Now those concerns are all coming back, even as the tariff situation remains calmer than it was. But the overall picture of slower US growth and an unsustainable debt path is going to go on driving investors to downgrade their outlooks for the US dollar.
Garfield, we're seeing more of the moves being more pronounced in the 30-year Treasury bond futures here. I'm just wondering, you mentioned about the risk of these bond vigilantes coming back. Are we likely to see more of this sort of bear steepening of the curve?
That's certainly a risk. And in fact, if you think back to 2023, August 2023, Fitch downgraded the US, and that initially had only a small impact on bonds, but it ended up being a key trigger for the bond sell-off that struck in the second half of 2023, and which was very much a sort of, oh, look, the bond vigilantes were only sleeping, they're not dead. We had term premiums jumping. The Fed had to ultimately slow down its tightening moves and reassure markets that it would take into account what was going on before that faded away. So we have the risk that this time round, this will also be part of a longer term move. We already have yields pretty high, pretty elevated as it is. If they go significantly higher, that's going to, I was saying last week that bond yields are already at levels that are getting close to where the previous few incidents that led to stock market declines. Now we've got equity futures selling off today simply on the risk off the concerns that it's raised. But if Treasury yields really start to surge higher in that sort of bear steepening move, that's also going to weigh down equities just at a time when a lot of investors had started to think that the all clear was there for equities because Trump had stepped back to a far more, apparently far more manageable level on tariffs.
Garfield, I mean, apart from this U.S. credit downgrade, I'm just wondering what else your team is watching out for this week. We have China data coming up as well. I mean, what's in store for you?
Yeah, the China data is obviously a key input. See how the China economy was tracking in the immediate wake of the tariff boost at the start of April, and that may help investors to get a handle on how keen China is going to be to push forward to get a lasting resolution. Looking separately, there's also what's going on in Europe, where we've got Vance and Zelensky meeting. We are supposed to get a call between President Trump and President Putin later on today at some stage. Big questions as to whether there can be anything that would look like a sustainable move towards peace. between Ukraine and Russia. As I think the biggest concern, in fact, is that whether Trump will end up committing himself to things which the Europeans would regret at a time when European and US political and economic relations are very strained. That's definitely, in many ways, I think we're keener on watching what this does to Europe-US relations than what it necessarily does as far as resolving the war in Ukraine.
Garfield, thanks so much. Garfield Reynolds there, who leads our Markets Live Asia coverage. And let's stick to that story here right now. A source telling Bloomberg that Vladimir Putin believes he has a strong hand ahead of a phone call Monday with President Trump. In the meantime, that is going to be our question of the day, I should say, when Moody's could also spur those sell America trades once again. Let's bring it back to what's going to happen, right? The diplomacy that's at play here, with Washington really pressing for Putin and to end the Russia's war in Ukraine as well. For more, let's bring in our senior editor, Wendy Benjaminson, who joins us from D.C. Wendy, there's a lot at hand here in the next maybe 24, 48 hours. Just start on the whole Ukraine situation and what's expected today.
Well, what is it? Just a little while ago, Trump spoke with, at their request, a number of European leaders, UK Prime Minister Starmer, French President Macron, Merz, the new Chancellor of Germany. And they all wanted Trump to slow down, to understand that Putin right now, Vladimir Putin, has no reason to rush into a deal, and that Trump shouldn't give away the store, if you will, give away too much of Ukraine, in order to just get a deal, because Trump is very transactional. Trump very much likes to, measure his success in terms of deals signed, activities checked off a list, and he wants peace. And I'm not sure that he wants it. He wants it so badly, frankly, that I don't think the finer points won't matter to him as much as it does to the European leaders. Trump and Putin are scheduled to talk at 10 a.m. Monday morning, Eastern U.S. time. And we'll get a readout after that, and we'll see where Putin stands. But yes, Putin believes he has a strong hand. Most defense analysts do not believe he has a strong hand, and that this stalemate on the battlefield will continue, which is making Ukrainian President Volodymyr Zelensky rather despondent at the state of affairs right now.
Wendy, speaking of stalemates, we're also keeping tabs on the House committee. I mean, Gav kind of alluded to some of this, taxation as well as spending. What's the latest on this?
Well, the latest is they have been meeting. Small groups of the conservative holdouts have been meeting with the House leadership, which, now remember, I'm talking entirely about Republicans here. They don't need Democrats to pass this bill because they have a very slim majority, but a majority. And so this is all Republican infighting. And there are very hardline conservatives who want to cut spending even more. And the Moody's downgrading did sort of give them a little wind beneath their wings, in the sense that they can say, look, we have to cut this deficit, and you can't do it with this bill. But they've been meeting all afternoon. The House Budget Committee convenes at 10 p.m. tonight, New York time, and they are hoping that there will be enough of an agreement by then that the House Budget Committee can pass this $3.8 trillion bill out of committee, and it could get to the full House for a vote later this week. The trouble is that also then it has to go to the Senate, where more changes could be made, and it could be slowed down. So the July 4th deadline for enacting this, 4th of July, the American Independence Day, could slip.
Yeah, we'll be waiting for any signs of a breakthrough, even though it does seem like a bit of a slim chance at the moment. Wendy Benjaminson for us there, thanks so much. Now, we're also keeping tabs of other developments out of the U.S. Former U.S. President Joe Biden has been diagnosed with an aggressive form of prostate cancer that has metastasized to the bone, and the cancer is characterized by a Gleason score of 9, indicating that it's likely to grow and spread quickly. But Biden's spokesperson added that the cancer is hormone sensitive and may respond to hormone therapy, and treatment options are being looked into. The cancer news comes as Biden and Democrats have been dogged by revelations in a new book about the former president's declining mental faculties during his time in office and efforts to gloss them over. More ahead on the Asia trade. This is Bloomberg.
Well, geopolitics and President Trump's tariffs are expected to be top of mind as Asia's biggest electronics conference, Computex, kicks off today in Taipei. The ongoing trade tensions are seen upending the way the world's most prominent tech firms, such as NVIDIA, have traditionally done business. Let's bring in Annabelle Drewler. She joins us live from Taipei here this morning ahead of that event. And Belle, you know, when Jensen Huang steps onto Taiwanese soil, I think he just automatically gets this kind of rock star status and treatment. You spoke to Huang ahead of this event. What did he have to say?
Yeah, that's right, Yvonne. I think it's really interesting because you kind of think about last year, really, it was that big focus on Gen Sanity, and there was so much focus on the run-up that we'd seen in the NVIDIA stock and the promises of AI. And certainly the event, and we can get to this in a moment, is going to be a little bit more subdued this year. But as you said, it doesn't mean that Jensen Huang doesn't still continue to have rock star status here. And so we spent the weekend following him around the city at the different events that he attended to try and get some questions into him. And I did actually manage to speak to him a couple of times. Important to note as well that this trip to Taiwan, it's actually coming very hot off the heels of his trip to Saudi Arabia, where he attended Middle East region with President Trump. And there were these multi-billion-dollar deals that were signed to send billions of dollars of semiconductors, billions of dollars of AI accelerators. And the real concern that's building out of that is that if you have so much high-level advanced U.S. technology going outside the U.S., there's that risk that it ends up in the wrong hands. But I spoke to Jensen Huang about this, and here's what he told me.
Governments understand that diversion is not allowed, and there's no evidence of any AI chip diversion. Now, recognize our data center GPUs are massive. These are massive systems. The Grace Blackwell system is nearly 2 tons, and so you're not going to be putting that in your pocket or your backpack anytime soon. And so these systems are fairly easy to keep track of. But the important thing is that the countries and the companies that we sell to recognize that diversion is not allowed. And everybody would like to continue to buy NVIDIA technology. And so they're very well, they monitor themselves very carefully, and they're quite careful about that.
So, I mean, you heard there Jensen Huang really downplaying any sort of risk of AI chip diversion to China, but that doesn't mean that we're not hearing from sources within the Trump administration who are saying that there are significant national security risks that are arising from these accords.
Belle, as you just alluded to, you also spoke to him about China and chips. I mean, what's next for China?
Yeah, that's right, because the Trump administration only several weeks ago just banned the H20 chip sales into mainland China. Now, this is a product that was designed specifically for the mainland Chinese market. So the question, of course, is how is NVIDIA going to continue to meet not only the requirements of the US, but also continue to find something that is wanted by Chinese companies. The modifications, I mean, I asked him about the H20 in particular, what's going to be next beyond that. He said it's not going to be a product that comes from the Hopper series because these can't be modified further. NVIDIA as a company, it's already warning of a $5.5 billion write-down for the current quarter due to commitments and inventory that are linked to this chip, but still that question mark. And as I said, that question mark of whether NVIDIA continues to stay competitive in the mainland Chinese market as well. I did ask him at another point in the day whether there would be that risk of losing more ground to Huawei. He did concede that it is a risk, and there are a lot of challenges, but NVIDIA is saying that they will just continue to do their best.
And Belle, I mean, it's a lot in store here today. You mentioned the whole NVIDIA story. What else is on the agenda for Computex?
Yeah, well, still, actually, we can stick with NVIDIA because we're here at the Music Center where Jensen Huang will be appearing in a few hours on the stage, so talking through his keynote for the conference. But beyond that, we're also going to be very curious to be hearing from lots of other hardware players in the ecosystem. Things like the move to the edge, or the so-called move to the edge, which is when you start to see more AI showing up in PCs, smartphones. We've been actually sort of slow to see that ramp up. Production capacity and the orders that we're seeing for the likes of Honhai, for instance, for the AI servers. Things like trade tensions, of course, that's going to be very much in the fore. Are we seeing further investment commitments or pledges to the US market? How are companies grappling? Because a lot of Taiwanese companies continue to have business presences both in North America, but also in mainland China as well. So really a lot on the agenda over the next couple of days.
Yeah, trade tensions and AI. Bloomberg's Annabella joined us for us in Taipei. Thanks so much. And of course, we'll have more from Computex later on the Asia trade. We'll hear from MTM Venture Partners at Computex about what's next for AI and next generation computing. Founding managing partner Michelle Kiang joins us at 8:30 a.m. Hong Kong time. More ahead on the Asia trade. This is Bloomberg. Let's get your check on U.S. futures. Amid this Moody's downgrade to the U.S. credit rating, we're seeing that risk off more or less across the S&P, NASDAQ, Dow. Of course, this big question mark of the extent in which the downgrade is going to spur the Sell America trades again, given how big tech had really been these beneficiaries for much of the past year or so. They've now sort of returned and become the biggest question mark. So the extent in which that underperformance for tech might continue, of course, keeping an eye on the dollar as well, amid that selling that we're seeing against all the G10s pretty much, Yvonne.
Yeah, that certainly is what we're seeing across the U.S. dollar. And we're watching very closely the long end of the U.S. Treasury curve, right? The 30-year yield. If we continue to see this sort of bear steepening, levels to watch, right? We're at 494 right now, 497. That will take the yield to the highest since 2023. If we go above 5%, we might likely hit that 18-year high that was hit back then. So certainly that's one to watch here. And we're watching very closely what this means for some of these strategies among investors. But we certainly are seeing the biggest moves in the Treasury market, the dollar as well, down against G10 as well. We look ahead to what really that means when it comes to some of these tax and spending discussions and this bill in the U.S. that's continued to be challenged here right now. That certainly does lead to maybe some challenges with the discussions moving forward, given that that is supposed to add to, of course, the debt pile for the U.S. as well. And then, of course, what else is on tap? We got China activity data coming through here, retail sales, industrial production, and really we'll likely see the effects of what these triple-digit tariffs would have had or had on that month. More ahead on the Asia trade. This is Bloomberg. Welcome back. Markets are assessing Moody's U.S. downgrade with the dollar edging lower in early trading here this morning. Let's bring in our MLive strategist, Mark Cranfield. He joins us live from Singapore as he assesses the fallout from this downgrade, Mark. And obviously, we're watching the dollar fall across most of G10 here this morning. You know, does this once again spark this whole Sell America wave?
I think from a macro trader's point of view, certainly the U.S. dollar and Treasury bonds are clearly on their radar now. That's a relatively straightforward reaction, and we're probably going to see more weakness in both of those as the day and the week progresses. The one that's got more nuance really is the equity side. It's not a clear-cut sell for the equity market, particularly with the resurgence of the tech sector, and they seem to be loosening up there, particularly for companies like NVIDIA, AMD. They had those huge deals announced for the Middle East last week, and there may be more. They've got this huge tech conference going on this week in Taiwan, and there could be more good news out of there as well. So it's not such a clear-cut view on the stock market, but certainly if you're a macro trader and you're looking to take a defensive or even negative outright view on the United States, the US dollar clearly and the Treasury bonds are two places to go. And these are reinforcing signal as well, because it's not just about the United States. If you look at bond markets, there's very good reasons for wanting to steepen curves in Germany, in Japan, other parts of the world. So that's going back into the Treasury curve as well. And if you look at the US dollar, clearly there's a haven bid developing today for places like the yen and the Swiss franc. But then if you look at Europe as well, even Christine Lagarde, who's head of the ECB, is saying that it makes sense for people to support the euro because they're also going to be spending a lot more money there. Germany, especially, big fiscal stimulus. So she is actually talking up her own currency, which is something that the investors haven't seen on a consistent basis from European Central Bank for many years. So the fact that they're getting behind their currency, again, is a very positive for the euro. On the flip side, it's negative for the US dollar. So certainly the dollar and bonds are two places you would expect the macro strategies to play out quite clearly in coming days.
Mark, what about other Asian currencies? I mean, we've been having conversations about this in the past, right? How the G10s have gained as part of phase one. What is this going to mean for perhaps EM Asia FX?
More gains across the board for Asian currencies, really. Obviously, they're very closely tied, particularly to the euro. If the euro gets some traction, that's going to be very good across the board. Now, China, obviously, is the one that can slow things down. We'll be watching closely to see what the central bank in China does with its fixings. They seem to be reluctant to let the yuan go too quickly, which is quite understandable, considering that they're in the middle of negotiations on trade with the United States. But they have been gradually letting the fixing go a little bit lower each day, encouraging a little bit of yuan strength. Providing they continue to do that, that's a green light to Asian currencies across the board to get a bit stronger. Some will perform more quickly than others. The Singapore dollar is probably the best place to look if you want to get a gauge for how much people like Asian currencies. The Sing dollar will be closely tied to the direction of the euro and the yen because they have a decent weighting within the Sing dollar basket. So the overall picture is certainly positive for Asian currencies. The speed might not be as quick as what we see with some of the G10 currencies, very much dependent on how far the Chinese currency is allowed to appreciate in the days ahead.
Mark, thanks so much for sharing your analysis and what to watch out for. Mark Cranfield, Bloomberg's MLive strategist for us. Now, Iran's supreme leader, Ayatollah Ali Khamenei, is accusing President Trump of dishonesty and power abuse. The accusation comes after Trump's tour of the Middle East last week. And for more, let's bring in Bloomberg's Michael Heath. Michael, we're seeing this rhetoric kind of ramped up between the US and Iran's leaders. That is despite some talks going on. What is your sense of the totality of the relations between both sides now?
Yeah, I mean, it's sort of a two-track situation, isn't it? Because they've had several rounds of talks on the sort of the enrichment and the Iran potentially getting a nuclear weapon, and both sides have been pretty upbeat when they've come out of them, saying that that progress had been made, and even after the last lot, even though a date hasn't been set, they've certainly said that they do want to talk some more. So on one hand, you've got that. On the other hand, you've got a lot of officials in the Trump administration talking in different, they're not a unified view sort of when it comes to Iran, and Iran has sort of complained about that, the difference between what the US says in the media and what the US is saying behind closed doors. And I think that's fairly natural in a democratic state, and it's certainly a bit of a freewheeling administration like the Trump administration has shown itself to be. So I think on that front, you sort of want to concentrate on what's going on behind the closed doors. But President Trump's comments on Iran about it diverting money to support, its arc of fire around Israel. That's just a statement of fact, really. And to some extent, what Iran's supreme leader said about the US historically, some would argue that's just a fact as well. I mean, the curious bit which the Iranian supreme leader sort of missed is that President Trump is an outlier. He's not like US presidents before. So, he does really have this strong line that he's pushing, that he just doesn't want war. War is bad for business in many respects, which it obviously is. And so, it's a curious sort of standoff there. But I think a lot of it's heat and light. It's the stuff behind closed doors that we really want to be keeping an eye on, and whether they do meet again, which both sides have said they would.
And it seems like, Trump's sort of attention in the Middle East and this sort of embrace that we've seen is in some ways, impacting its relationship with Israel, maybe too, Michael. We're hearing that the clock is ticking on some sort of hostage talk. What's the latest in that front?
Yeah, I mean, it's sort of hard because both sides, we're sort of getting contradictory views from both sides. But Israel is basically has an ultimatum with Hamas saying that it's going to sort of reinvade Gaza. It holds about 30% militarily, and it's going to go in further unless Hamas is prepared to give up its hostages, disarm, and go into exile. Now, Hamas has not agreed to do that. And Israel has said that threat that it gave sort of has driven Hamas back to the negotiating table in Qatar. Hamas says that's not the case, that negotiations have been going on the entire time. But it does feel like we're sort of getting to an inflection point here. I mean, Israel's under a lot of pressure, obviously, to resume providing aid to people in Gaza. They're in a terrible, terrible state there. And the idea of them not having food and medical supplies is sort of beyond the pale almost. So Israel is resuming that. And there is this, risk of them going in again in terms of reinvading Gaza. Now, whether that's a ploy or whether they plan to do it, I mean, it's a very extreme government in Israel, and it does look like they will follow through on that. And that sort of President Trump is not about that, as I was just saying before. He's really keen on bringing these wars to a conclusion, allowing everyone to get on with business, basically. So it does seem to be opening a bit of a divide with Prime Minister Netanyahu more than Israel as such, but it's certainly one to keep an eye on.
Michael Heath, thank you, with an update of all things geopolitics and the like. We're taking a look at when it comes to the impact on oil prices in particular, just given talks of the end of the war in Ukraine and this call that could be happening later on this morning. The lowering of the U.S. credit rating also in focus for commodity markets. You're seeing Brent crude. We've recovered a little bit after that initial drop of more than 1%. We dipped below at $65 briefly here on the back of this news here. WTI was trading near that $62 level as well. Iron ore is slightly lower in Singapore. Gold, though, still catching that bid here. We're seeing upside about 1% this morning, Avril.
Yeah, absolutely. And we're keeping close tabs on other geopolitical stories as well. An Indian Defense Research Group says China gave Pakistan air defense and satellite support during its clash with India this month. The Center for Joint Warfare Studies reported that China helped Pakistan reorganize its radar and air defense systems to better detect India's troops' deployment. While the research group is under India's Ministry of Defense, New Delhi has not publicly mentioned Beijing's involvement in the conflict. South Korea's leading presidential candidate Lee Jae-myung says he sees no need to rush for an early trade deal with the U.S. During the first head-to-head television debate with his rivals on Sunday, he said the U.S. doesn't necessarily have an overwhelming upper hand in tariff negotiations. He also criticized the interim government for what he described as their hasty engagement with the Trump administration. The centrist mayor of Bucharest has won Romania's presidential runoff. Independent candidate Nicu Sordan secured more than 54% of the vote, defeating far-right candidate George Simion. The victory was helped by Romania's highest voter turnout in a quarter century and marked a check on the rise of right-wing parties in Europe. More ahead on the Asia trade. This is Bloomberg. Japanese markets open at the top of the next hour. We're seeing potentially Bessent futures a bit of that risk off feeding in potentially from that Moody's downgrade right on the U.S. credit rating, but also keeping an eye on that bit of safe haven demand that seems to be driving the Japanese currency against the greenback. 145.4 is where we're seeing dollar yen at the moment. And in terms of bond futures, also seeing that decline in Japan. Now, of course, amid all this, it's really about trade talks, trade negotiations between the U.S. and Japan, and the finance minister, Katsunobu Kato, plans to discuss currency matters with his U.S. counterpart, Scott Bessent, this week. And this comes as G7 finance chiefs prepare to meet in Canada from Tuesday. For more, let's bring in senior editor Brian Fowler for us. So, Brian, we've been getting off late a bit of mixed messaging on whether currency pledges are going to be in the mix. What is the extent in which they can be included in any discussions between the U.S. and Japan?
Well, good morning. I think very much they will be discussed, and I don't think there's much tension behind that. If you go to the terminal and you do the WCRS function, you'll see that all major currencies are up against the dollar year to date by, between 3 and 10%. That's something Washington has wanted to see to boost trade competitiveness of U.S. exporters. But there's also something to think about just in terms of the background here. We had ECB President Christine Lagarde over the weekend in a local media report saying that the euro's strength against the dollar so far this year comes down to a loss of confidence in financial markets in U.S. policies. So she's blaming the U.S. Policymaking process for undermining the dollar. And that's a pretty pointed rebuke coming from somebody of her stature, especially going into G7 week. So I think it's in the U.S. interest to come out with some kind of calming and stability enhancing approach to currencies when officials gather in Canada this week. So I think very much we could see an agreement which Japan wants in an agreement to let markets determine currency rates and otherwise basically keep your hands off.
Brian, there's a great story in the Bloomberg that talks about what this U.S.-China trade truce and how quickly this all came about, given the fact that China remained quite defiant leading up to those trade talks to get to this sort of truce. Does that spark some sort of rethink in terms of how Japan approaches their trade negotiations with the U.S.?
Yeah, I think that's absolutely the case. So we had our chief negotiator, Akazawa, last week saying that there are great benefits in communicating with other countries about how they're going through this tariff process. And I think that points directly to how China fared in its discussions in Geneva with the U.S. Those results for China were better than anticipated. And I think there's a perception now in the market that maybe the U.S. is recognizing that it maybe went a little bit too far with the tariffs, and that promoting freer and easier trade is actually a big benefit to the U.S. economy. And so we've seen more countries, especially in this region, talking about slowing things down. We had South Korea, of course, over the weekend, the leading candidate Lee saying that Korea should not rush into an agreement before the June 3 presidential election. And in Japan, there's a sense that officials are really waiting to define the process. They want to see auto tariffs part of the general discussions. It seems that the U.S. may be dragging its feet on that. So Japan wants to wait as long as it takes to make sure that that's part of these discussions. I would just point out that on Wednesday, we're going to have the April trade data for Japan, and that will be the first set of figures that will show us the impact of those auto tariffs, which kicked in from April.
Brian, thanks so much for setting up for us. Brian Fowler in Tokyo for us. Let's get more perspective on the Japan-U.S. trade talks with Tobias Harris, founder and principal at Japan Foresight. Tobias, it's great to have you. I mean, we talked about what's at stake here, but it seems like the narrative has shifted on how Japan can approach these talks in this third round. What is your expectations on whether Japan can actually secure a long-term trade deal with the U.S.?
Well, as Brian was just talking about, I mean, you really have this fundamental question of what is the U.S. willing to put on the table? Because I think Japan has been very clear that it doesn't want a one-sided deal. It wants automobile tariffs, it wants steel tariffs, it wants aluminum tariffs to be on the table, up for consideration. And I think the messaging from the Prime Minister and other members of his government has been is that this is pretty much a non-negotiable position. And so, frankly, until we see movement from the U.S. On those tariffs, it's going to be really hard to get a deal done, because I think Ishiba's put himself in a position where he can't really climb back on that.
Yeah, you mentioned about the auto tariffs. I mean, that 25% tariff on Japan auto imports is still there. What do you think Ishiba is thinking? Do you think his administration is willing to sacrifice the domestic agricultural industry to win back those tariff reductions when it comes to autos?
I think it just depends on the overall deal that's on the table. And in fact, I think, we've now seen some reporting hinting that the Ishiba government might be open to lower auto tariffs, but not completely removing the new tariffs that were introduced. But the overall package, I mean, for now, we have not really heard what the Trump administration is really willing to put on the table. And frankly, I don't know if we've heard that the Trump administration is even happy with some of the potential agricultural concessions that that have been discussed as possible from the Japanese government. I mean, the overall picture, the idea, what exactly are they looking to get out of Japan in this? Is the goal, getting rid of Japan's bilateral trade surplus with the United States, or is it market access for U.S. goods, whether or not that results in eliminating that trade imbalance with Japan? And until we get to that point, I think it's really hard to say what exactly does an agreement between these countries look like.
Tobias, what about sort of like the domestic audience at this point? Because there is also an upper house election coming up. Does that in a way play into trade talks?
I think it absolutely does. And I think it certainly has affected Ishiba's sense of timing, that, not wanting to have certainly he doesn't want a bad deal at all, but a bad deal right before the election, I think, is going to be bad news. I think, a deal that saves Japan's automakers, that limits the impact on agricultural producers. I think that would be a great deal for him to announce right before the upper house campaign, and I think he's looking to have some achievement that he can take to voters. But if that deal does not look like it's materializing, it's much more likely, frankly, that talks will drag on past the upper house elections. That Japan is better off waiting to get a better deal than to have something inadequate to put before the voters in July. So, it really depends on what ultimately is on the table. But clearly, the fact that Ishiba doesn't want to be going to the electorate having to face accusations that he's thrown Japanese agricultural producers under the bus, that's not something the LDP wants to have to run on in the upper house election. So it really depends on the substance. It's not there's not a one-size-fits-all agreement here as far as the LDP is concerned.
What about the currency? I mean, how is that figuring into negotiations, you think?
I'm skeptical that currency has that much of a role to play. I mean, it's been coming up, it's been floating around, it's been mentioned as possible. I don't think at the end of the day, I don't think a deal. I don't even know what a currency deal really looks like, considering that Japan has not been devaluing its currency. If anything, when they've intervened, it's been to strengthen its currency. I don't think the Japanese government is really in a position to put monetary policy on the table. I think they're going to resist that. And when it comes down to it, they're also not going to agree to some sort of specific numerical target for dollar-yen either. So ultimately, I don't know what exactly a currency deal looks like. I don't know what Japan is willing to bargain in favor of a currency deal. And so ultimately, I mean, I think, they'll have these discussions, but when it comes down to getting some sort of trade deal done, I don't think currency is really going to be an important plank of that.
Yeah, Tobias, you talk about the relationship between the U.S. and Japan. Japan is very dependent on the U.S. when it comes to security. There's a $63 billion trade surplus with the U.S. I got to wonder, though, how much leverage then does Japan have going into these talks?
I think we're seeing that it's trying to find sources of leverage, but ultimately, and some of it is the structure of bilateral trade. I mean, it's not that there's an easy fix, to make either Japanese buy more American stuff, or to get Americans to buy less, other than leaving the tariffs in place, right? I mean, if the U.S. is really serious about reducing or eliminating the trade deficit with Japan, I mean, ultimately the best thing is going to be leaving the tariffs in place and encouraging Americans to buy fewer things from Japan. That's a little uncomfortable for Japan. In general, though, I mean, I think what has been interesting over the last several months, watching the Japanese public's response to the Liberation Day tariffs and the auto tariffs and so on, I think there's a feeling of frustration and betrayal, and I think it's in some ways stiffened the Japanese government's spine. I think there's a feeling that in the past, perhaps the expectation was, the government has to do whatever it takes to make the U.S. happy, to keep the U.S. engaged and committed to Japan. But I think there's a feeling that, there were certain promises made during the first U.S.-Japan FTA talks with Trump in 2019, and there's a feeling that those promises were broken. There's a feeling that without really having a clear sense of what the U.S. actually wants, there's a sense of, the U.S. being unfair and being arbitrary. And so therefore, I think there's an expectation that if Ishiba just, placated, did whatever it took to placate Trump, that actually could backfire domestically in a way that I think would not necessarily have been the case in the past. And so this is something of, uncharted waters. We don't really, the way that domestic politics are playing out in this situation is a little different than what we've seen with the U.S. in the past.
Yep. So also potentially feeding into what we were discussing earlier on Japan, maybe taking a leaf out of China's playbook when it comes to negotiations with the U.S. Tobias, thanks so much. Great to get your analysis. Tobias Harris, founder and principal at Japan Foresight. Now catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo, and subscribers can watch live on the terminal using the TV Go function. This is Bloomberg. It's shaping up to be quite a week, Yvonne. I mean, we've just been discussing what we're getting out of the U.S. and that Moody's downgrade for its credit rating, but also digesting, continuing what we're seeing in Chinese tech names, right? From last week, that optimism fueled by solid earnings from JD, from Tencent, maybe Alibaba missing the mark a little. But at this point, we're really watching out for Bilibili, Baidu, Xpeng, the sense of resilience you get despite this tariff war that's ongoing, Yvonne.
Yep, and I got my eye on the CATL listing that's happening on Tuesday here in Hong Kong. It's set to be a big boost for Hong Kong. It's set to be one of the world's biggest listings this year. So certainly that's one to watch, raising $4.6 billion in that secondary listing here in the city. And yes, this is one that has faced what? Pentagon blacklisting, a global trade war, and yet strong interest still leading up to this debut. We got the market opens coming up in Australia, Tokyo, and Seoul coming up.
This is the Asia Trade. We're counting down to Asia's major market opens. And Yvonne, of course, we've been digesting that bit of news about the Moody's downgrade to the U.S. rating and the extent in which this spurs the Sell America theme even further along, Yvonne.
Yeah, you're seeing that across dollar. You're seeing that across the Treasury market and Treasury futures, I should say. We'll see how things wake up when Treasury markets open in Japan, but certainly one to watch. And as Mark Cranfield from MLive told us, you might see it in those asset classes, but when it comes to equities, there's still other reasons to maybe still be optimistic.
Yeah, and the jury seems to be still out on that front at least. Also keeping close tabs on how this is all going to feed through into Asia. And certainly this is coming off a week of gains in APEC stocks, including in Japan. So let's take a look at how markets are faring at the start of trade. Nikkei pointing flat, as is the topics. Maybe not that much of a read-through just yet, but certainly we've been seeing how the Japanese yen seems to be catching a bit of that safe haven bid again, seeing it moving towards the 145 level, which of course, if it gets there, would be, I think, the strongest level we've seen against the greenback in about 2 weeks. And of course, for context, this is all coming against the backdrop of the Japanese GDP. Remember, last Friday showing us in the first quarter, before the hit from tariffs, already not doing that great. Take a look at how South Korea is faring as the dollar slips. Korean won seeing that bit of gaining about 1/3%, 13.96 they were seeing on dollar. Korean won, maybe a bit more pronounced the risk off we're seeing in South Korea, Yvonne.
Yep, and we'll take a look at what Australia is doing at the open. Obviously, it's the RBA week. They meet on Tuesday as well, and it's pretty much priced in that they're going to be cutting about 25 basis points in this next meeting here. But certainly that stronger than expected first quarter CPI data, that might reduce the chances of a bigger move, but hasn't it completely taken it off the table? You got to also take a look at this U.S.-China trade reprieve. That looks to be boosting the outlook for Australia as well. Aussie dollar has actually recovered quite a lot since April as well. So we're at 64 U.S. cents for the currency. And we're taking a look at what happens here when it comes to, of course, long end of the Treasury curve. You're seeing a 30-year yield up about 1 basis points. We're at 495 levels here right now. Keep in mind, if we get to 497, that gets to the highest that we've seen since 2023. If we punch above that 5% level, which is what people are maybe forecasting given this credit downgrade, we could be talking about 18-year highs for that U.S. 30-year yield. So something to watch here as, of course, we count down to more of this fiscal position in the U.S., these tax and spending bills as well that people are debating here at the moment, Avril.
Absolutely, and how that has continued to feed in through the dollar, potentially the Sell America theme as well. So let's bring in Vasu Menon, Managing Director of Investment Strategy at OCBC Bank. Vasu, nice to see you.
Thank you for having me.
On a day like this, no less.
Indeed, yeah, so much of news.
Yeah, so what is your assessment of the extent this is going to spur Sell America?
Well, I think it's going to reinforce that expectations, but I don't think American stocks and bonds are going to fall off the cliff. So back in 2011, when S&P downgraded the US sovereign credit rating, you saw a big sell-off in the S&P 500. It fell almost 7% a day after the rating downgrade. Global equities are down 5%. But then if you look at what happened in 2023, when Fitch downgraded, the sell-off was not very significant, under 2% for both S&P 500 and global equities a day after the rating downgrade. So this time around, you're seeing futures weak, but we don't think that this is going to result in a big sell-off in US equities, big sell-off in global markets. It may take some wind off markets, but this is not a game changer because S&P had given warning in November 2023, and this is the third downgrade by a major rating agency. So the markets have had enough time to digest all this piece of news. And so as a consequence, you don't think that, we'll see a big fallout for equity and bond markets simply because of the Moody's downgrade.
I guess to your point, we're seeing a bit of, the US 10-year catching a bit of a bid, interestingly enough, amid all of this. But the difference this time around is how Treasuries markets were already concerned about the fiscal issues, perhaps more so than the two instances of downgrades past.
Indeed.
So does that change things, you think?
Well, it will change things to some extent, but I don't think it's again a game changer. The concerns have been there for the last year, even 2 years, and there have been various projections about how US fiscal deficit could increase significantly in the next 10 years, how US government debt could increase significantly. But yet you've seen the 10-year Treasury yields, at least in the short term, range straight between 4% and 4.5%. It's not broken the 4.5% level. It did do that momentarily after Trump imposed reciprocal tariffs. But then when he backtracked, it came back down again. So this might cause it to go up above 4.5%. I won't discount that. But it may not stay there for very long because, I think essentially the markets have had time to digest this. The problems that Moody's highlighted are long-term, structural in nature. They're talking about what's going to happen in the next 10 years. And, a lot of things can change in 10 years. So, I think it's more rearview mirror. It will create some excitement in the markets, but I don't think it's going to change the course of markets, which we're still fairly positive on for the next 12 months.
And Vasu, you mentioned still there might be some reasons to stay in U.S. assets. The dollar, though, despite this trade reprieve that we got from the U.S. and China, Wall Street still seems pretty downbeat when it comes to the dollar. What's your dollar view now? Well,
we tend to agree. We're not downbeat. We think that, the dollar could see further weakness. The Fed's, dollar index, the nominal broad dollar index is down 5.6% year to date. Historically, it's gone down even more than this. So we won't be surprised if it, comes down further because of Trump's erratic policy making now with the latest Moody's downgrade and other factors which have led to some degree of loss in US exceptionalism. So we think the dollar could come off. We don't see it again falling off the cliff. It'll probably come off more in the coming months. But again, that is not, we think, a reason for investors to get out of US equities. We are not underweight US equities. We are neutral US equities.
Yeah, I was going to ask you your take. I mean, the S&P is back in the green for this year already, but one thing has still underperformed is the Mag 7 and the big tech. Do you foresee the big tech to actually, regain the sort of historical dominance it's had in the past few years?
It depends on your time frame. If you're talking about the next 3 months, 6 months, I think it's hard to say. If there's risk aversion coming back into the markets from time to time, the Max 7 will be impacted because, these stocks are risky stocks. They are risky proposition. But I think if you take a view for the next 3 years, 5 years, I'm more confident. I think AI is here to stay. This is not the dot-com boom of, 2000, 2001. This is for real. You will see a lot more CAPEX spending going into AI. And so, we are quite positive on the Max 7, on the tech sector, on the AI sector. We think it's a super trend. Of course, in the short term, you will see periods of volatility, pullbacks. But, if you look at how the MAX 7s have performed, there was a big sell-off, but they've also rebounded significantly, but they've not gone back into the green, as you said. But, if you take a longer-term view, then I think there's still a case for, investing in AI, tech, and MAX 7.
Yeah, so that bit of maybe the question marks surrounding valuations. But Vasu, the other thing we've been watching also is trade talks, right? And we've seen that truce come in between the US and China.
That's right.
To what extent do you think that's going to be a bit more fuel, a tailwind? Because markets do seem a bit more realistic in what can be achieved in this period.
That's right. I think a lot hinges now on what happens with the US-China trade talks. We've got a 90-day pause. That ends sometime in early August, I believe. And so the markets will be waiting to see what happens. But from the rhetoric that's coming out of the US administration and Donald Trump, it seems like they want to strike a trade deal with China quite badly. And I think there was a lot of escalation at the beginning, but now you're seeing a significant de-escalation. I think what is more worrying, in my view, is what might happen ex-China. So we've not seen any significant deals aside from the UK. We're still waiting for Japan, we're waiting for South Korea, we're waiting for India. And I think, what Trump has said in the last few days is that, in the coming weeks, the US will be notifying countries on what the final tariff rates will be. And Scott Bessent said that, the countries that will be notified that way will be countries who the US deems has not been dealing in good faith in terms of the trade negotiations. Yeah. And so they're just going to get the reciprocal tariffs that was announced on 2nd of April. So there's a risk that, we could see some surprises on that front. Not so much with China, because I think the US recognizes China is a major player, but it's the other countries outside of China that I worry about and what the final outcomes could be.
Vasu, we talked a lot about the US. What about outside the US? Where's the most conviction that you have now?
Our greatest convictions right now are in Europe and Asia ex-Japan. And we've been right. I mean, European equities have done well. We still think that, there's more upside, partly because, the ECB could cut rates more. We think more rate cuts from the ECB compared to the Fed. Fiscal policy in the US is also turning more expansionary, and this is not a 6-month, 12-month story. It's a structural 3-year, 5-year story because of what's happened with Trump's policies and the New World Order. And valuations for European equities are definitely much cheaper than the US equities. The other area that we like are Asia ex-Japan, but not all the markets. We like China. We think that, China is... we've been positive on China, actually, for several months, and we've been right. Again, Chinese equities have done well. They've come off, but they've rebounded very nicely. We think that, China has a lot of scope for domestic spending, fiscal stimulus, and so China, Hong Kong, and Singapore, which we think is a defensive market. So those are the markets in Asia we like.
Right, Vasu. We'll be keeping in watch on the China data for the month of April that's coming out as well. Give us a sense of the whole following Liberation Day.
Indeed.
Vasu, thanks so much for sharing your analysis with us in the chat. Vasu Menon, Managing Director at OCBC. More ahead on the Asia trade. This is Bloomberg. A source tells Bloomberg that Vladimir Putin believes he has a strong hand ahead of a phone call Monday with President Trump. Trump also plans to speak with Ukrainian President Volodymyr Zelensky and NATO members, and this comes as Washington is pressing for a quick end to Russia's war in Ukraine. Let's bring in Singapore, our news desk editor, Jill Deeses, for us. So, Jill, I think there is more pressure for a quick end to all this. Maybe there's going to be a phone call between Trump and Putin, but Russia also seems to be signaling that they have the upper hand still in Ukraine. Does this tell us anything about the extent we can see any form of concessions?
Yes, well, I think at this point, Avril, it's really difficult to get a handle on what an end to this war still would actually look like. So leading up to this, we've had a few developments. Just at the end of last week, there were some sort of intermediary discussions between Ukraine and Russia happening in Turkey. The thing is that Putin ultimately sent a low-level delegation to those talks. And so you didn't really see a whole lot of developments out of there. It certainly kind of signaled that, at least from the Russia side, we're not yet at that stage where, you might see anything anything that resembles lasting peace. They did agree to a prisoner swap, but aside from that, again, no major developments. Then you had over the weekend at the inauguration of Pope Leo, J.D. Vance, the vice president of the United States, talking with Zelensky. That was actually their first in-person meeting since that fairly disastrous Oval Office incident just a couple of months ago. Some initial chatter there, but again, all of this leading into this phone call with Trump and Putin. Trump obviously is going to be really pressing for a quicker end to this war, as we've also seen. Trump is also has said that ultimately Ukraine, Zelensky needs to make some kinds of concessions here. But again, it doesn't really seem like we're at the stage where it feels like there's a lot of super meaningful progress. But we will see how this call between Trump and Putin goes. Trump has kind of indicated maybe something in person would need to happen to get some more lasting developments. But again, we'll have to see what happens with this call.
Yeah, Joe, can you tell us just how far apart the two sides are right now? You mentioned they agreed on a prisoner swap, but the talks really only lasted about 2 hours in Istanbul last week.
Yes, that's right, Yvonne. Again, just not really indicating to us that there's been a ton of major progress here. Remember that at the end of the day, Zelensky still doesn't want to give up, these 4 or 5 areas of Ukraine that Russia has kind of demanded would need to be part of any concessions for them. So without those kinds of developments here, if they're not actually coming to some sort of concrete, decisions here on what exactly, some kind of a deal would look like, some kind of a lasting peace deal, again, that's what makes it really difficult to see, where, Trump could potentially come in, sort of facilitating something that feels a little bit more lasting. Again, this call between Trump and Putin, maybe some initial steps there. Afterward, Trump is expected then to speak with Zelensky and other NATO members. So ultimately, we'll have to see what comes out of these talks. But, as we were just discussing, it does seem like, at least from Trump's perspective, he would want to push something in person. Whether Trump, though, is on the same page as, the rest of these NATO members, along with Ukraine, though, is kind of a different story there. So again, we'll see what comes out of these talks. But as we've been discussing, seems like it's a difficult road ahead.
Yeah, and what does Trump actually, what level or what we need to see that would actually appease the president? That certainly is one question, too. Jill Deese is our Bloomberg News desk editor. Let's focus on geopolitics as well, because what we're focused on that, plus President Trump's tariffs, are expected to be top of mind as Asia's biggest electronics conference, Computex, kicks off today in Taipei. The ongoing trade tensions are seen upending the way the world's most prominent tech firms, such as NVIDIA, have traditionally done business. Let's bring in Annabelle Jewelers. She joins us from Taipei as we count down to this big event in Taiwan. Belle, you spoke with Jensen Huang. What do you have to say leading up to this event?
Yeah, that's right. So Jensen Huang, he arrived last week, actually, and we spent the weekend really just tracking his movements around the city. I mean, we were speaking earlier about how Gensanity really set the tone for the conference in 2024. 2025, the outlook for AI is a lot more subdued, and there's a lot of question marks over the demand that we're seeing for AI infrastructure and for AI services as well. But Jensen Huang coming here really fresh off that trip to the Middle East, where he attended, of course, with President Donald Trump. It was huge multi-billion-dollar deals to sell not just semiconductors to Saudi Arabia, but AI accelerators to the UAE. Now, the concern with these sorts of accords that are in place is that there's not going to be enough in the framework to really prevent this sort of technology getting into the hands of places or people that it shouldn't. Of course, it's all about that diversion, that risk of diversion from the US into China. But I asked Jensen Huang about that, whether there are any possibility of that happening. He told me this.
Governments understand that diversion is not allowed, and there's no evidence of any AI chip diversion. Now, recognize our data center GPUs are massive. These are massive systems. The Grace Blackwell system is nearly 2 tons. And so you're not going to be putting that in your pocket or your backpack anytime soon. And so these systems are fairly easy to keep track of. But the important thing is that the countries and the companies that we sell to recognize that diversion is not allowed. And everybody would like to continue to buy NVIDIA technology. And so they're very well, they monitor themselves very carefully, and they're quite careful about that.
So really downplaying any sort of risk that this technology could make its way into China. I spoke to Jensen Huang as well about the H20 chip. That certainly came into what would be next for the mainland market. But he is still really trying to, I guess, continue to have that business into the mainland market. It makes up around 20% of the company's revenue, and also continue to really work with the Trump administration.
Belle, certainly trips are on the agenda at Computex, but what else are you going to be, bringing to us?
Yeah, well, I mean, I'm here at the Music Center actually in Taiwan, and we're going to be hearing from Jensen Huang kicking off this event in just a couple of hours. So there's already a lot of people. I can see the press that are lining up as well. So it really just speaks to how this is going to be really one of the most watched events of the day. It's interesting, though, that one of the more interesting things could actually be what the new Intel CEO, Lip-Bu Tan, does. So Lip-Bu Tan, he's taken over from Pat Gelsinger, and he's really got a very big workload in front of him to turn around what was one of the most storied chip makers. But he said she's not going to be giving any sort of keynote. His focus is really going to be on meeting with lots of different customers, suppliers as well. Interesting to see how those sorts of conversations go, and whether he can convince some of those clients that Intel's foundries can be some sort of viable alternative to TSMC's.
Belle, thanks so much. Bloomberg's Annabelle Jollers in Taipei for us. And we'll have more from Computex up ahead. MTM Venture Partners joins us with their insights on the future of AI and next generation computing, but also have some lines to bring you an alert about this, of course, relating to Japan and how leader Ishiba is indicating when it comes to U.S. tariffs, including for cars, right? Because autos have really been this sort of key focal point when it comes to U.S.-Japan trade talks. Ishiba saying that they can't accept U.S. tariffs, including for cars, and that Japan is seeking a win-win relationship with the U.S. Via investment, and that's going to be key, he says. Certainly today we're seeing that risk-off in Japanese markets. Stocks are down. Bonds perhaps following what we're seeing on the long end in U.S. Treasuries. Dollar-yen hovering at 145.2. More ahead on the Asia trade. This is Bloomberg.
Iran's Supreme Leader Ayatollah Ali Khamenei is accusing President Trump of dishonesty and power abuse. Now, this accusation comes after Trump's tour of the Middle East last week. For more, let's bring in Bloomberg's Michael Heath. Michael, certainly some pretty strong remarks from Khamenei over the weekend. What does that tell us about these talks between D.C. and Tehran?
Morning. Yeah, it's sort of a two-track situation. We've got these talks that are going on behind closed doors, sort of more technical talks, looking at Iran's nuclear activities. Obviously, the US, Israel as well, and much of the Western world doesn't want Iran to be able to produce a nuclear weapon. Iran denies that it's even doing that, even though United Nations and other independent groups suggest that what it's doing does put it in a position to be able to create a nuclear weapon. But they've both expressed some optimism and a degree of progress in these talks that have gone on. What's really frustrated Iran is that then there's been all these mixed messages that have been coming out publicly and through the media from the US administration. Now, it's not surprising. I mean, the Trump administration, there's a lot of voices coming out of there, and the president at the end has the final word. But there's just a lot of sound that comes out and sort of confuses Iran, I guess, to some extent. As to what President Trump had said last week, I mean, that Iran uses budget funds to support its arc of resistance, Hezbollah, Hamas, these sort of movements. I mean, that's just a statement of fact. And it's a little surprising that Iran is so upset about it. And the interesting thing, too, is when he's sort of pointing to the past about the US not using its power for peace, I mean, you could argue it either way, but certainly Trump is not cut from the mould of previous US presidents anyway. He does actually seem quite serious about wanting an end to wars, wanting the whole region to calm down quite a lot too, and everyone to sort of get back to business and doing well. So, yeah, I mean, look, there's heat and light, and this rhetoric often flares up between the US and Iran. But I think you want to watch what's going on in those talks. The last ones, again, there was some optimism. They haven't set a date for the next one, and that's sort of what we'll be watching for there.
What about when it comes to Israel and Gaza? Because Israel does seem to be gearing up for a sweep there. And this is coming against the backdrop of the clock ticking down to hostage talks.
Yeah, and you know, when we spoke last time, you also mentioned this sort of a bit of a divide between the US and Israel growing as well, and it's a really, really interesting situation there because, as you say, Israel is gearing up to almost sort of re-invade Gaza. I mean, it holds about 30% militarily, but it's basically saying it's talking about taking the Strip again and in a determination to release the hostages. Now, Israel says that threat brought Hamas back to the table in Qatar for talks, you know, saying that basically that it needs to keep this pressure up. And Hamas official told Bloomberg that that's not the case. They've been in talks the whole time. Israel's basically seems to be following the Witkoff plan, President Trump's envoy, which is basically that 10 hostages would come out and then Israel would sort of, there'd be a pause and they'd try to end the war and then the remainder would come out as well. So there is, it does seem to be movement, but you have to remember that Prime Minister Netanyahu is sort of constrained. He's got a very extremist government that sort of keeps him, you know, the parties that keep him in power, which he doesn't want to lose. And so that's sort of why he wants to keep that military pressure going. And it's causing tensions with the White House, definitely.
Michael Heath, thank you on the latest on that. And checking on some of the futures in Europe that are opening here right now. We're seeing pretty steady when it comes to stock 50 futures as well as in the DAX here this morning. We're flat on both of those. But what is catching a bit is the euro, of course, against the dollar, given this dollar slippage we've seen in the back of this credit downgrade from Moody's on the U.S. over the weekend. We got more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade, and of course the big story over the weekend, indeed from last Friday, was how Moody's downgraded the U.S. credit rating, and now it's got that AA1 rating. Does this reinforce those concerns about, you know, the fiscal worries on the longer end, particularly for treasuries? Indeed, does this reinforce that sell America theme? The dollar certainly becoming that sort of fall guy when it comes to that narrative. But we're also seeing in terms of stocks, Japanese benchmarks down about 0.6%. We're also seeing losses in South Korea and Australia. Of course, amid all this, we did get a sense of the earnings narrative, right? Providing a sense of perhaps resilience when it comes to corporates, and the tariff story from last week. Remember, when it came to Japanese banks, those record profits still seem to be the expectations, Yvonne, but they are accounting increasingly for the tariff headwinds. And looking there at the region's benchmark, sitting a bit softer as well, Yvonne.
Yeah, as you mentioned with Vasu, does the whole trade truce in any way help the situation, right? And he said, you know, it's quite on the margin because we have to see what happens after those 90 days. But he did mention, you know, U.S. stocks, U.S. assets are still attractive in his eyes here right now. And in some part, you know, when it comes to the Treasury story, and there really is no alternative in some ways to, you know, the liquid debt markets that the U.S. has, too. But we're talking on the FX impact on all this as well, Avril.
Yeah, and we have with us David Finnerty, FX and rates strategist, to kind of unpack the kind of reaction we should be expecting in markets in the short term, at least. I mean, we're seeing dollar down, but this kind of, you know, is something that we've already been seeing for much of this year. What's different this time around? How significant exactly is this Moody's downgrade?
Well, I think it's certainly, overall, I don't think it'll be a big game changer. I think it's certainly not a positive. And I think it's, if you put in the context what's going on with the dollar at the moment, there's been many reasons to sell it. And you've got another reason now, basically, to add momentum to it. I do think, though, having said that, the market will move on quite quickly from it. If you look at the Treasury market, sort of stabilised very quickly today. So if US yields aren't doing much, then you're not seeing much of a catalyst from that end. But having said that, I think other things could happen. You've got Japanese Finance Minister CATL saying he may have currency discussions with Scott Bessent this week, and if that does happen, and if it is indicated that, hey, yen will go stronger, then obviously that means a dollar weaker, so that's one thing. I think also you have PMI data out this week for Eurozone, UK and US. Now, the US, normally the ISM data is more closely watched, but at the moment, any data will go, and we'll use all that data for the Eurozone, UK and for US and any other country to see how every country has surviving the tariffs, because now we've got a better idea of the tariff impact. So at the moment, if that data comes out weak, certainly on the US side, that idea of US exceptionalism will again be fading even more and more, which will weigh on the dollar more. So at the moment, the bias is towards dollar lower. You have seen these pullbacks, classic one being last Monday, but people are using those as re-entry points to sell the dollar again. But it's certainly a bit of a choppy trade at the moment, which is flushing out quite a few hedge funds one way or the other, should we say.
You alluded to this, right? I mean, that's also potentially this entry point for yen, but how complicated is the path for the BOJ given the growth trajectory that seems to be expected? We got that data from last week out of Japan as well.
Yeah, I think it certainly is. It's definitely complicating the path. There's no two ways about that. They said, look, hey, we will still hike if needed, if it meets their expectations. But again, we don't really know how this tariff is all going to play out. And again, Japan still have to have discussions with US to see if tariffs can be amended lower or not. So you still have uncertainty at the moment. Look, the market's kicked down the idea of a BOJ rate hike. It's kicked that well down the road. And obviously that could change again. But for the moment, given all the uncertainty, you'd have to think at the moment, BOJ's, look, let's just wait for the moment, let the dust to settle, and then go from there.
David, you mentioned, maybe as people shift away from the US dollar, people talk about the euro, the yen as beneficiaries. What about when it comes to Asia FX? Because, how dependent do you think that sort of complex is going to be, to what the renminbi does and how policymakers there are going to allow the renminbi to appreciate?
Well, certainly at the moment, it's been they've given the fixing has sort of, from a yuan perspective, got gradually stronger and stronger. But maybe again, very slightly. So the PBOC is signalling, look, hey, we're certainly in no hurry to let it depreciate, but we're certainly in no hurry to let it appreciate either. Often one thing you've really got to watch on is not just dollar yuan, it's the yuan versus the CFETS basket. And that's often, which is basically yuan against its traded weighted currencies basket. That's often the one that moves more than dollar CNH. So I'd keep an eye on that one. But certainly from dollar and CNH, at the moment, it's sort of the indications are, look, we're going to keep it sort of range bound. What's range? You could say anywhere from 715 to 725, so quite a big range in that way. But at the moment, we're sort of in the middle of that at 720. And I think China's going to say, look, let's see how these negotiations go on. I don't think it's going to want to poke US by doing, certainly not to appreciate the currency, but then again, it's in no hurry for it to appreciate the currency, because that's not going to help exporters. And I said today we have a lot of China data coming out, basically the China data dump, retail sales, fixed assets, industrial production, and we'll see a good gauge of how the impact has been on China economy. So if the data comes out, shall we say, on the weak side, then again, if you're China, do you want your currency to appreciate too much? Arguably not in the near term.
Whether it's appreciation or depreciation, the PBOC signals seem to have been more about measured, controlled, steady as she goes kind of thing when it comes to the Chinese currency. David, thanks so much for coming in. Lots to rake through today. FX and rate strategist David Finnerty for us. Let's turn to Taipei, where Asia's biggest tech conference is set to get underway. Computex starts today, and our tech reporter Annabelle Drolis is standing by with our next guest, Belle.
Thanks, Avril. Yeah, joining us now is Michelle Kiang, founding managing partner at MTM Venture Partners. And Michelle, thanks so much for joining us. We were just talking earlier, this is actually the first time that you've ever come to Computex. So what made you make the decision for this year?
Yeah, absolutely. Because Computex obviously has been many years a big electronic trade show in Asia, but the focus has always been on like PCs, maybe mobile phone to a degree, so not a lot of like really cutting edge innovation. But this year is totally different, right? It's all about AI, and especially about what's next for AI. And then to me, it's the physical AI is really going to be the next frontier. So I'm very excited to come here and see, what's happening, what's the latest.
So as a VC fund that invests in earlier stage technologies, which of those areas, you're talking about that sort of physical application of AI, but which ones stand out to you right now?
Yeah, definitely. So in terms of physical AI, what that means is that, it's like devices that has agentic AI, so AI that, with agency. So a couple examples, like autonomous vehicles, and then robotics, in general, and then certainly like humanoid robotics is an area that's particularly interesting to me, because that's really in the traditional robotic space, that's developed or deployed in the warehouse and industrial settings. But the next frontier is really about having robots that work in the human environment. That's not designed for robots, and that's why humanoid is interesting. Because it's about having those robots that operates alongside human and really help to boost productivity for us and being a good companion.
It's a really interesting moment because on the one hand you've got this application of AI into areas like robots or like autonomous driving. At the other hand though, you've got rising tensions between the US and China, and you've got all of the tech rivalry that plays into that. You've got also question marks which affect startups around the Fed and where rates go from here exactly. So what's the business environment looking like right now with the companies that you work with?
Yeah, that's a good question. It's interesting. So I think that I, as an early stage investor, I work with a lot of early stage startups. So certainly in the past, the U.S. government has played a very critical role in funding early stage, especially in semiconductor hardware, to take these innovation that's coming out of university into the real world. But now with the funding, public funding that's maybe taking a step back, certainly we're very much not only investors, but also these companies themselves are starting to look for alternative sources for these kind of early stage support. So I think that in a way, definitely create opportunity for investors early stage to get into this deal early, but also potentially for corporations that's interested in working with these innovators, getting access to these companies that maybe in the past not necessarily wanting to work with big companies. So this could be a good opportunity for both sides, for startups to get connected early and then also for large corporations to get access.
So just spell it out a little bit more. So if the funding was previously, and I'm talking here for US companies, if that funding was previously coming from the government or government sources, where is that funding coming from now, and do they need to look for partnerships outside the US?
Yeah, absolutely. So, the continued government funding is maybe questionable, but there are a good number of private funds are still looking at investing in early stage companies. Especially, I think that even though in the past there are less funds that's interested in investing in hardware technology, but I think that with this great boom in AI, definitely has created a lot more interest in investing early stage like semiconductor and physical innovation, hardware innovation. So there are investing money that you can get, but as well as now more and more companies, as I said, established company working with early stage innovators. And then so that's also not only this company, they have corporate venture, can provide capital for these companies, but as well as providing resources such as a manufacturing partnership, but maybe channel partnership for these companies, which are equally important to a startup.
You're also on the board for ITRI, and for people that aren't familiar, this is an R&D body here in Taiwan, and it gave birth to names like UMC and TSMC as well. What's the environment looking like here for startups in Taiwan?
Mm-hmm. Yeah, there's definitely a great interest in promoting more Taiwan-based startups. So the government is definitely doing a lot to support early stage startup, very much like the same way U.S. and other countries are doing. But in addition to that, definitely they are also looking at leveraging resources and capabilities such as ITRI to work with startups. So there are both internally developed technology from ITRI they want to help spin off, but ITRI is also very much looking forward to working with early stage innovators from around the world to come and work with ITRI to help them. So in a way, maybe almost like TSMC, how it got started. Where came back from the US, but brought with idea and some know-hows, and then that's how TSMC ended up getting spin-off. So I think the government is very much looking for continue to support TSMC, obviously, but also looking at what's next. And then actually yesterday, National Science and Technology Council, I just announced this idea of maybe forming a new startup in the robotic space, very much in the same vein of TSMC, because they see this being an opportunity to be kind of the next major company that Taiwan may have the opportunity to play a pivotal role.
All right, Michelle, thank you much for your time. That was Michelle Kiang, their founding managing partner at NTM Venture Partners. Really enjoy the conference today as well.
Thank you.
All right, great interview there. Annabelle Jewelers joining us out in Taipei at Computex. Let's take a look at how these treasury markets are doing here this morning in Japan. And you are seeing that 30-year yield continue and extend that sell-off that we saw on Friday. So we're up some 2 basis points. We're close to that 497 level. That was take us back to the highs that we've seen for the U.S. 30-year yield since 2023. You are seeing a little bit of that fallout in some of these Asian bond markets as well. The Aussie 10-year yield's up some 2 basis points. But then again, we're watching very closely the long end, the short end, as you're seeing the 2s and the 10s in the U.S. Not doing a whole lot. In fact, the 2-year yield is actually down some 3 basis points. But Euro bond futures, though, are also heading lower this morning. More ahead on the Asia trade. This is Bloomberg. A big data dump coming up here in China with the activity data for April. So certainly one to watch, right? What effects did the initial triple-digit tariffs have on activity in China? Sectors such as industrial output, retail sales are expected to show a hit here. For more on how markets are anticipating the data, let's bring in our Asia equities reporter, Charlotte Yang, joining us here. So macro very much in focus here. What's your team focused on the most this morning?
Yeah, so this morning, today the keyword is macro data. So everybody's watching, the cohort of data that will be coming, I think, in about 15 minutes. So I think, so basically, traders are looking to a window to show how China's April activity has held up, amid the trade tariffs. And so economists are saying that they're expecting some initial pretty severe impact reflecting these data, such as industrial production and also retail sales. And we have to remember that this came off after last week, which we had weaker than expected April loan data. They're already showing, weaker household and corporate demand. And we had 2 sessions of continuing weakness in Hong Kong share city and also onshore. So if the data print is bad, I think investors are looking to whether authorities will be cutting the 1-year loan prime rate and 5-year loan prime rate tomorrow. So, and also after Baba and Tencent earnings, now the attention is now back to the macro front, I would say.
Charlotte, the other story you've really been tracking for us is the Hang Seng and the quarterly review on the index, what's included, what's not, right? I think some had been expecting PopMart, but we're seeing how Medea, ZTO, Express, they're the ones that have been included. How much of a lift is this going to provide for their stocks?
Yeah, there's probably some disappointment to the Labu fans of PopMart not making it into the index, even though some analysts have pretty high expectations. So the key stocks we're watching today include Midea and ZTE Express after they've been added to the Hang Seng indexes, and also BYD will replace China Literature to be included in the Hang Seng Tech Index. That's also another one to watch, and also BYD is among a bunch of other names such as NetEase, which I think Goldman Sachs strategists are expecting among the most passive fund flows. So those are the names we'll be closely watching today.
All right. We'll have to wait for another quarterly review for Labubu to make its appearance again. Charlotte Yang there, Asia equities reporter, joining us with a preview, of course, of that data coming through pretty shortly here. And if subscribers, you can also turn to the terminal for more on China's key economic data releases. T-Live Go is your function for the latest updates, plus commentary and analysis from our expert editors.
Meantime, some of the stories we're following. Former U.S. President Joe Biden has been diagnosed with an aggressive form of prostate cancer that has metastasized to the bone. The cancer is characterized by a Gleason score of 9, indicating that it's likely to grow and spread quickly. But Biden's spokesperson added that the cancer is hormone sensitive and may respond to hormone therapy, and treatment options are being looked into. An Indian Defense Research Group says China gave Pakistan air defense and satellite support during its clash with India this month. The Center for Joint Warfare Studies reported that China helped Pakistan reorganize its radar and air defense systems to better detect India's troops' deployment. While the research group is under India's Ministry of Defense, New Delhi has not publicly mentioned Beijing's involvement in the conflict. South Korea's leading presidential candidate Lee Jae-myung says he sees no need to rush for an early trade deal with the U.S. During the first head-to-head television debate with his rivals on Sunday, Lee said the U.S. doesn't necessarily have an overwhelming upper hand in tariff negotiations. He also criticized the interim government for what he described as their hasty engagement with the Trump administration. The centrist mayor of Bucharest has won Romania's presidential runoff. Independent candidate Nicusor Dan secured more than 54% of the vote, defeating far-right candidate George Simeon. The victory was held by Romania's highest voter turnout in a quarter century and marked a check on the rise of right-wing parties in Europe. More ahead on the Asia trade. This is Bloomberg. Now, Baidu, Bilibili and Lenovo are among the Chinese tech firms in focus for this week's earnings. It'll come as the easing US-China trade war brings back some optimism for the sector. Expectations for the tech industry have been boosted by strong results from Tencent, from JD.com last week, but concerns remain about Beijing's stimulus policies and US-China trade tensions. And of course, also watching this week, CATL set to start trading in Hong Kong tomorrow after raising $4.6 billion, completing the world's largest share sale so far this year. And the offer saw strong demand, even as the Chinese battery giant faced a Pentagon blacklisting, US congressional scrutiny, a global trade war, you name it, right? And all this ahead of the secondary listing. Bloomberg senior equities reporter Abhishek Vishnoy joins us now for what to expect. So certainly it's a stock that's been seeing a lot of hot demand. What are you expecting? How big of a splash on its trading debut?
It's a discovered idea. It's a market leader with 38% market share in its industry. It's a very loved stock, and it was just in A, so it has come in H. I mean, it won't be like an IPO blockbuster day like Mixu or Blocks, but those are very small IPOs. So they jumped 41% on day one when they came to HK. This may not be that much because the issue got priced at the upper end, right, 263 Hong Kong dollars a piece. But it's CATL, it's that portfolio stock that you own to balance out portfolio for, recurring purchases, for better Z-score, adjusting volatility. So it'll become part of a lot more portfolios. And this, opens the gate for a lot of foreign investors who are looking into, owning EV. I mean, what better to own EV battery space than to own the shares of a market leader like CATL. So it won't be a big splash, but it'll be a higher grind for sure, 10-12% probably. And then slowly from there, the stock should build upon its strength.
And Abhishek, Avril mentioned, right, this company is basically, caught between all these tensions between the U.S. and China. How are investors looking at that? And why do you think, despite all these geopolitical tensions, there is such strong interest?
Yeah, that's a very good observation. The first sentence of our story, even just look at that, U.S. scrutiny, trade war, blacklist. And these are the odds that the stock has overcome to do what it has been doing. These are the odds that bankers as well as CATL have overcome to list in HK market. And this is a very positive signal. This is a market leader getting listed in HK. This year's biggest IPO. It's not a small listing. It's a very big listing. It opens the door, or it increases the appeal for foreigners to come in and own a part of China. It also shows Beijing's resolve for keeping Hong Kong as a top global financial center. And, it strengthens the equity capital markets theme that's happening in Hong Kong and rest of the world. It's not just about China. And given the listing is happening in HK, it adds to, the bunch of positive things that have been happening for Hong Kong Equity Exchange, making that stock also look a bit more attractive. And finally, I mean, there are two very important things. Look, this is not exactly AI, but this is a partial tech bet. So it sort of solidifies China as a tech bet in the portfolio, and also it sort of limits the ADR delisting risk. I mean, there is a pathway. You come to HK, list here.
Abhishek, great to have you, senior equities reporter Abhishek Vishnoy there. Take a look at what happens to futures in China as we count down, of course, to that big April activity data coming through here in about an hour's time. This is Bloomberg.